Hey, good afternoon. Today is May 11th, 2022. 2000 tick chart for the E-mini S&P 500 futures market. 21 EMA here in blue, 9 EMA here in cyan, and a 200 EMA in magenta here. We have a MACD at the bottom, but we primarily use technical analysis, price action, and overall market context in order to place our trades. Take a second, real quick, like the video, subscribe to the channel if you like content like this, and let's get right into the video for today. So today was a fairly decent trading day for me. I finished the day 4-1. I had a loss today that I want to talk about, and it invokes the question, when using this catching stop strategy, do signal bars matter? And we'll go ahead and analyze that when we get to that part of the video, but that's just something I want you to think about today as we're going through the trades. When utilizing the catching stop strategy, have you been focusing on signal bars, or are you just taking things as they are? Ultimately, any trading strategy is considered a theory, right? We have a theory about how things are supposed to work based on a set of rules, and I think it's important that with any strategy, we continue to test the theory and continue to refine what we know about that strategy so that we can dial in a little bit more and maximize those profits while minimizing those losses. As we do on this channel, we'll start by marking overnight highs with a level of resistance. We had two big bars. When I opened the charts this morning and I saw this, that bar size in ticks is 133. That's a massive bar. I haven't seen that in a while. I don't think I've seen that ever, to be honest. But regardless, we marked the overnight highs and then overnight lows, level of support down here at the bottom. So the market opens here, prices are trending upwards, and as soon as prices try pushing above the 200 EMA, there's a level of resistance that's found, and prices push strongly below the 21 EMA. 9 EMA is crossing over the 21 EMA as well. Now, some people may see this as a new high, first entry that takes place, and then prices push down for a second entry above this bar, and so they'll look at going short below this bar here. And I think if you enter there down to 125, down to 1, you'd still get out for the scalp if you're going for 2 points, if you're trying to enter on this bar. But realistically, I just didn't trust this entry too much. I saw this as just resetting the count as prices were strongly pushing down. So as prices came down, I saw this as a first entry, and I was looking for a second entry above this bearish bar here. I didn't want to enter a little bit too early. So I mean, you could mark that because if you're counting exactly as these bars show that the second entry takes place over here. But I waited a second. I saw prices come up, and as prices were reversing, I wanted to enter short one tick below this signal bar right here. Prices are holding. There's no close above the 9 EMA, so we keep that trade in. Prices continue pushing down. I'm into this trade, and I'm out for a scalp before prices started to push up again. And we do have this break. Prices moved to a new low, so this downtrend had played out. So we're looking for prices to reverse above EMA. New low here, first entry short, prices come up above EMA. Second entry short failure, you could look at going long above this bar right here, and that's not utilizing the stop loss strategy. That's just trading a failed second entry short. Decent signal bar as prices push up, and you get a scalp out of this. So prices start to push up above this 21 EMA. 9 EMA is also holding strongly above this 21. Prices are again pushing above the 200 EMA as well, so we could see prices continue to move up. Now, before I jump ahead of myself here, we had a new swing here. Prices come up down for a first entry short. I was looking for a second entry short to trigger, and it did. The second entry short triggered, and as prices were reversing, I put my stop limit order one tick above the signal bar here. So this was the bar I entered on right above, and prices came up, and I got a scalp out of it. Prices did come back down to stop out my runner, but again, I got the scalp, and I was comfortable with that. Prices continue to push higher. No way to get into any entries here, just because we start getting closes below this 9 EMA, so not looking to catch any stops. But you have this channel at play. Prices break it, make the new high, so this uptrend has played out. Now, when that uptrend plays out, what are we thinking? Okay, well, from here, we're looking to see how prices are going to react at EMA. If anything, we're looking for prices to reverse and push back down below the EMA. So we get this new high. First entry long takes place, and as prices come down, second entry long. Body of the candle is far from 21 EMA, but prices tried pushing down first and then came back up. So there's a second entry long opportunity. The only reason why I don't like taking that is because the uptrend already played out. So we shouldn't continue looking for longs just yet. We'd be entering too early. But for those that did enter this, you're out for a scalp before prices push back down. We get a close below the EMA, and the next bar forms, and we get a lower lower high. Prices tried pushing up one more time before coming back down and closing. I traded this lower high because I really like that close below EMA. We're reading the market context correctly as we had that break in new high. Prices are trending down. 9 EMA is crossing over 21 EMA, and we ride that for a scalping runner. Prices consolidate for a little bit here as prices oscillate up and down above this 9 and 21 EMA. It's flattening out, not looking to take any trades. Then prices push down. We have the short-term trend that's working down with a break, looking for a new low. We have the new high for the swing here. First entry long, second entry long if prices tick above this signal bar. Next bar prints, we don't get a close above the 9 EMA. I have my stop limit order one tick below this signal bar. Additionally, I should mention this big channel I don't have in play yet. So I don't mean to confuse people. I didn't have this big channel in play yet. But I had my stop limit order one tick below the signal bar. Prices came down, filled me for the trade. 375 down to 175. That's 2 points. Prices ticked down to 150. So you would have just been out that trade for a scalp before prices come back up. Now, the reason I saw it as an aggressive trade is just because this 200 EMA was coming up. I was very hesitant about going short into this 200 EMA. Additionally, if we rewind it just a little bit, you see a loss of momentum in MACD. So was this the best trade to take? No, but that's why I marked it as aggressive. I'm glad that trade worked out that time. Prices push back above EMA. Now we have a short-term trend at play as prices are working down. We have a slight break looking for a new low, new high. First entry long, prices come down, form a new low by one tick. Second entry long, but you see the close is just at the 21 EMA. We have bars congested here. If prices trigger above this bar, it's a second entry long. The only reason why I was considering this trade additionally is because we had a new swing low, first entry short, prices trap trader trying to go short for a second entry short. So if prices reverse and prices tick one tick above the signal bar, you have a second entry long and you're trapping all the people that were trying to go short as this 200 EMA is coming up. We had this strong push above EMA. It's aggressive, but that's the way I read it. And as prices came up, you're in and out for a scalp. Now, this is the loss I want to talk about for today. We had the new swing start here. And as prices came up and down, that's a first entry short. Prices come up and down for a second entry short. There's the trigger, second entry short with the catching stop strategy, placing your entry order one tick above the signal bar. And as prices come up, you're in that trade before prices come back down and stop you out of that trade. So this is really the question for today. And I really want to know what people's comments are and what people think about a trade like this. Does a signal bar matter when we're trying to catch stops? I've heard when we're trying to trade failures, we don't necessarily care about the signal bar. Well, could a rule be if we have a doji bar, we have to neglect that? We cannot see that as an entry point. It's a question I want to ask though, and I feel like the important thing to do with this strategy is find rules that will keep us out of nasty trades. We can't be taking every single catching stop strategy on every swing. We don't want to do that. That's not sustainable and it won't work every time. There have to be a set of rules. There has to be a standard so that we avoid the nasty trades that would stop us out. Now, some trades are inevitable, right? We will without a doubt lose some trades. We're not going to have rules that's going to stop every single trade. But the goal is to minimize those losses and focus on maximizing those profits. So this was a trade I lost, but I'm curious to know what you guys think. Now, this area of the chart is another one that I want to talk about. Let me go ahead and remove some of these additional channels here. So according to the indicator, what do we have? We have a swing here with a first entry long, second entry long before prices push back down. Now counting from this swing here, we have a first entry long, prices come down for a second entry long above this signal bar. If you're trying to catch stops and we don't care about what that signal bar looks like we were talking about here, you would enter one tick below the signal bar. Now, according to the rules we have, prices are chopping along. We don't get a close above 9 EMA here before prices come back down, get you into this trade and would stop you out as prices come back up. Now, I understand what the indicator says, but I counted it a different way. This was the most recent swing we had, so this is actually where I started the count. Prices came down for a first entry long. Prices dipped down, came up for a second entry long that failed. I had my entry one tick below this signal bar here. So as prices came down, I was in and out of this trade very quickly. That's how I read this. But the reason I want to talk about this area of the chart is because let's say we were going to enter on this bar. I know that one of our rules talks about, if there is a close above 9 EMA, we remove the entry order. But what about the number of bars? If we get too many bars, could the trade have already played out? Now, I see two sides to this. One side of the argument, I see, okay, well, with more bars, we're just building up momentum before the push happens. But the other side of it I see is as more bars start to form, buyers and sellers are creating a sense of equilibrium in the market. So the more time that plays out, the less likely there's going to be a strong move, right? Two sides of the coin there. Another thing, I'm very curious to know your comments. Please let me know down in the comments. Even if it's brief, tell me what you think about that. Should this catching loss strategy work right away, or after 2-3 bars, we take our entry out anyway? Because by this time, we have more buyers and sellers in the market, creating that sense of equilibrium. It's less likely for prices to just flush and push down. Sure, there are some people that have their stops here, but as prices continue to work out a little bit, the number of stops that are there are going to be reduced. So by the time prices come down and try to flush you, it's not enough momentum. Prices will push back up. Very curious to hear your thoughts on that. Now, I can't remember the channel I had before. I think I was just trying to draw something in here to hold prices, but that's what I had. This is the area of the chart we just talked about. As prices come up, prices push down below EMA, finding a little bit of support here at 200 EMA. I saw the 200 EMA here and I was kind of hesitant to go long around this area, so I didn't. I saw we had a spike in channel moving down, and so that's kind of what I was focusing on. Then we had a break of this channel move down to a new low. So hypothetically, this spike in channel has played out. We're looking for prices to push back above the EMA. And so once prices push back above the EMA, I was looking for longs. I was looking to catch stops. Now I counted from this swing here, prices came up first entry short, and as prices came up and down for a second entry short, I had my entry order one tick above this signal bar here. Now some people could place their stop limit orders one tick above this swing, but I was looking to get in a little bit sooner only because I saw this play out and prices are holding above the EMA here, space between 9 EMA, 21 EMA. MACD is showing bullish momentum. So I got in early and I was in this trade for just a second before prices pushed up for the scalp. It didn't flush quickly, but based on how I was reading the market, that's why I took the trade right here, this catching stop strategy. All right, and we're almost done for today. Prices continue to push up before breaking this channel here. And now we have the steady channel working down. We have the 9 EMA crosses over this 21 EMA here. And starting from the swing, we have prices come down for a first entry long. Prices continue down, looking for a second entry long to trigger. Now with this bar that formed, prices had pushed down first and then came up. So the second entry long triggered after prices started coming up. So I had my stop limit, I had my entry order one tick below the signal bar. I didn't have it below the swing here. I did one tick below the signal bar, and as prices came down, I was in and out for a scalp. Now, I did feel I got somewhat lucky with this because when I entered this, I had my stop limit order one tick above the signal bar. One tick, right here is my stop. Prices came down, got me into the trade, and on this next bar that formed, prices came up, and I was literally one tick away from getting stopped out. But then prices pushed back down, and I got the scalp in time before prices did come back up. But again, another bar, somewhat doji, right? A little bit of indecision. Is this a trade that we should be taking? I'm curious to know your thoughts. Please let me know. Now, I had a note here, but it's somewhat self-explanatory. We have a new swing here. First entry long, second entry long. If there's a trigger above this bar, there is, but we start getting closes above 9 EMA, so we can't take this trade here. The other thing I think I had mentioned was initially I had somewhat of a channel working down with a break move to a new low. Once we get that break and move to a new low, we can't look at catching stops trying to go short. We have to get further confirmation that a downtrend is in place. So this is just too aggressive to go short on. Prices do come out and you would get the scalp, but it is aggressive for those reasons. But then once we start getting prices that are moving down again, we have a bigger channel at play. We extend this previous range that we had, right, to accommodate more of the price action. Then we have a break of this channel here moving down to a new low. Then we get the new low here before prices come back up to test the EMA again. We obviously have a bigger trend at play, and that's why I drew this afterwards. But I was done trading at 11:30. I really want to get into a habit of just focusing on trading first 2 hours of market open. So from 8:30 to 10:30, that's really where I want it to trade. Just get solid 2 or 3 trades in at most. And I'm looking for those high probability setups. I'm not necessarily looking for the aggressive trades here. But as I'm training my eyes, that's why I mark them. But I'm very curious to know about your thoughts about the things we discussed in the video today. It's definitely a shorter video today, which I appreciate. I want to keep it that way. I don't want these videos too long. I hope that you guys had an amazing trading day, and I will see you tomorrow. Thanks for watching.